Gold continued to trade with the bearish bias today, as we discussed in our Asia and Europe session update, that below 94-95 levels, 89-91 is the first support zone. Precisely, gold has taken the support from 91 and is now trying to reverse. And on the other hand, crude oil reversed from 72 levels, failing to stay above 72. We have seen a sharp reversal and it has come towards the support at 70.5. Now, what to expect from gold and crude oil today? We will see with the help of charts and indicators, and I will give you the trading levels and strategy for the US session. If you are new to the channel, do subscribe to the channel to get the latest updates. This is the second update for the day. First, we'll look into gold here, followed with silver, followed with crude oil. Watch till the end. Now look at the hourly charts. See, on the hourly charts, there is a reversal sign after a couple of bearish candles taking the support from 1991 levels. It is trying to reverse. First bullish candle, second is just in making. Also, the prices were divergent from the moving average. It is trying to converge. Thus, 2000-2002 zone is something you should watch out for. And only bullish reversal confirmation in gold today is about 2010. Yes, if you see the price is staying above 2010, then more bullishness can be expected. See the drop, retracement, drop, support here, and it is trying to retrace. If you connect the dots, 2000-2002 zone is going to remain critical on the upside. Stochastic rising here from the oversold. See MACD, after staying bearish, sitting at the bottom, it is trying to diverge and look upside. RSI is flat. Coming to 2 hour. Likewise, on the 2-hour chart, see it is formed a tail and it is starting to rise. There is a probability that it can try to move towards 2000-2002 zone, and if it stays above 2002, we can look forward to 2006 and 2010 zone. Now this is the zone which is going to remain critical, 2006-2010. If you see prices staying above 2010, you can say that prices are trying to stay bullish. The stochastic rising from the bottom here, forming double bottom, it is trying to reverse. RSI is bearish. It is trying to converge. It has not yet crossed over. But yes, if you look at the moment, rise, retracement, drop again, and now forming the double bottom, if it crosses over, you can say that the bullishness may prevail from the current levels. RSI is still oversold levels. Coming to 3 hour. Look at 3-hour charts. See one bearish candle here. Price has failed to stay bearish here. You can see this. It is showing a pullback. Then the preceding candle comes with again the same tail on the downside, forming the support here at 1991, strengthening the support here at 1991. Now it is started with the lower high, so we have to wait for it to break out beyond 2002 in order to confirm further. As long as 2002 levels is not taken, we cannot expect this as a reversal, and specifically we have to observe how it behaves at 2006-2010. Now remember, prices are trading with little divergence from the moving average. What it is trying to do, it is trying to wait for the moving average to come down and wait for the prices to climb up, such that achieving those levels, it will decide the direction. A stochastic flat at bottom. MACD is bearish here. It can possibly converge. RSI is at bottom. Coming to 4-hour charts, look at 4-hour charts. See double bottom on the preceding candles, lower highs here. So once it stays above 98, there will be further rise which we can expect towards 2000-2002 and then towards 2006-2010. If you look at the moving averages closely, these have crossed over here, 20 and 50 crossover. The 20 and 100 crossover is also here. Yes, it is trading below this red line. This is the channel which it was trading in. Now the prices are trading with little divergence from the moving average. However, one must note that it may try to trade in this bearish channel. Thus 2000-2002 levels you should watch out for, and then 2006-2010. Staying above 2010 is where little bullishness is confirmed, where the next resistance levels are going to come here at 2018-2022. Stochastic rising from the oversold levels. MACD is still trading with divergence and bearishness, and see, these are the lows on the 4-hour charts which it has seen earlier from where the rise was seen, and you can notice the rise from these levels took it towards 2150 levels. Now again it has hit a bottom, trading with extreme divergence. Possibility of convergence here exists, which means bullishness can prevail. RSI at bottom. Coming to the daily chart. Now look at the daily chart. See, observe these daily candles. You will observe that sharp bearishness, retracement, resistance here at 2040, 2035, and after the retracement, lower highs, first bearish candle. Also this bearish candle last trading session of last week has left a wick on the downside. Today we have seen it continuing with the bearish bias. Now one should also observe that this is the point, that is 1990, from where the previous rally started. It has come to the same zone. 50 period moving average is also sitting here at around 1989 levels, and this makes 1989 1991 as a stronger support zone. Below that, below 89 levels, we can expect 84 85, and below 84 85 is where further bearishness will be observed, which can take the prices further on the downside. Moving averages have started to converge here, but are still in the bullish zone. Stochastic is oversold. It can try to show a pullback from the current levels, but look at MACD. What MACD has done, see, I have shared several times, these are the peaks which we have seen on the daily charts for gold, and after crossing over at the top, it is trading with divergence, it is trading and looking downside. It has further scope for it to continue on the downside. RSI is looking downwards as well. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategy. And before we proceed, if you want to learn this art of trading, you should join my mentorship batch. The 28th batch is announced. You can be part of it. Register yourself now itself. Reach out to me for more details or visit my platform www.forexfunda.com. My Telegram ID, my email IDs, and the platform details are mentioned in my channel and video description. Also, we have started a weekly webinar series where every Sunday we discuss what to expect from the markets in the coming week, and we take a holistic view of all the indices, commodities, and the dollar as well. And also we take up your questions live. So do not miss this. Do register for the webinar series, and this monthly webinar package comes with a 2 live consultations where you can have a face-to-face consultation with me for 15 minutes and discuss any of your issues, any of your account and trading related issues. Also, you can ask me to do a forecast and live analysis for you. So do register for the webinar series. Visit the platform forexfunda.com, and yes, if you want to be part of my signals channel, reach out to me via Telegram or email. Now, considering this, right now I will recommend you to buy here at 2002 levels, but with a caution note that if you are buying at 2002, 2006 is the first resistance, 2005, 2006 is the first resistance, then 2010 levels should come into picture. And we know that beyond 2002 is the only bullish reversal confirmation. Thus, as long as 2010 is not taken or breached, we should be trading with the trailing stop loss and strictly with the stop loss at the entry price. On the downside, now we know we have seen 89.91 as a greater support zone. Thus, we have to wait for it to break below this zone 89.91. Below this zone, certainly the bearishness may prevail, and then we can look forward to 84.85. First target, 78.80 next, and then 1972.5 as the third target. So take your trades accordingly. Now let's have a look at crude oil. Now see what crude oil has done. The drop here, the retracement towards 72, and now again starting to move on the downside. But it has seen a very good support here at 70.4 70.5 zone. We have discussed this in our earlier update that 70.4 70.5 should be a greater support, and then the $70 levels. Now this is the only on the hourly charts. See, it has erased all the gains from the current levels and now taking the support from 70.4 70.5 levels. Now on the upside, once you see it staying above 71.2, yes, you can buy again. Wait for it to break past 71.6, and once it stays above 71.6, again the bullishness may be seen, and we will look forward to this time higher highs towards 72.4 72.6. Stochastic has come to oversold levels, trying to bounce back, but look at MACD. This has crossed over at the peak, trying to trade with divergence and bearishness, but too much of divergence calls for it to converge. Let's see if it crosses over and moves again on the upside. RSI has dropped as well, coming to 2-hour chart. Likewise, on the 2-hour charts, after the drop, price is retraced here and moving averages have started to converge. It has not yet crossed over. Now look at the preceding candle and these lower highs taking the resistance from the 20 period. Now this candle can again try to move on the downside where 70.4 70.5, very good support. As long as 70 is respected, we have to be cautious with the selling entries. It can possibly bounce back, but this is going to remain a greater support zone. While if you see it is staying above 71.2, we can expect it to reverse again. We can expect it to trade bullish again and expect it to achieve higher highs. The stochastic back to oversold. MACD is trying to converge, crossover for a selling entry. Right now it is bullish once, and yes, it can again continue to diverge and retrace further. RSI has dropped as well. Coming to 3-hour chart, look at 3-hour charts, consistent bullish candles, then yielding higher lows, higher highs. It has given a breakout on the downside. It has come to the support levels. Now I'll observe how it behaves at 70.6 levels, 70.4 zone. Once it stays below this, certainly more bearishness, and as long as 70 is respected, yes, possibility of a bounce back still is there. Moving averages have started to converge, but it has not yet crossed over. It is just staying bearish. Only thing was the prices were divergent from the 20 period. It has converged, in fact, towards the 50 period moving average and then has dropped. The stochastic looking downwards, the MACD was trading in green. It has started to converge. It has not yet crossed over. It is just trying to converge a bit before it looks over to further up move. RSI has dropped. On the 4-hour, look at the 4-hour charts, rise here and sharp pullback. Yes, it is still giving you flat bottom and higher highs. Thus, as I said, we have to watch out more closely how it behaves at 70.4, 70.6 zone. Stochastic looking downwards, MACD is in green, trying to converge a bit. RSI is flat and at trading comfortable levels. Coming to the day, now look at the daily chart. See sharp bearishness here, couple of retracement candles, and now starting with the flat note, it has continued to stay bearish. It appears that it has taken a dive, and once it stays below 70, certainly more bearishness is going to prevail for this week, where we are going to look at further lows from the last week. We can expect the prices to move towards 68 levels. If it stays below $70, certainly more bearishness is going to be seen. Right now it is precisely at the decision levels that which direction it wants to take. Any move above 72, 72.4 certainly will take it towards 74. Now if you look at the prices, these are divergent from the 20 period moving average, which is sitting at around 74, and the 50 and 100 are too far above at close to 78, 80. There is a possibility that it can continue to converge towards the moving average before looking forward to any down move. But right now it is not showing much of a strength. Stochastic started to rise from the oversold levels on the daily charts. MACD is at almost double bottom levels. It has tried to converge but not willing to cross over yet. See, forming the lows here, it has retraced and again forming the double bottom. There should be a possibility of a convergence and a crossover for retracement. So we have to wait for it to break past the critical levels now again. RSI is at bottom as well. So looking at the charts, I will recommend you to sell. First, you have to observe how it behaves at 70.4, 70.6. At this zone, you can take a selling entry and wait for it to break below 70 levels. If it stays below 70 and continue to trade on the downside, this time we are going to look forward to lower lows from the last week. We are going to look at 68 levels and then 67 levels as well. If it continues to trade below $70 this time, more bearishness is going to be seen, specifically towards 69.6 and 69 levels, the double bottom levels from the last week, and below 69 certainly we are looking at 68, the first target, 67.2 the next. On the upside, if you now see oil trading again above 71.2, you can expect that the base or the bottom is created and now it is trying to take an up move, and one can buy here at 71.2, expect 71.4, 71.6 as the first resistance zone, 72 is the next. Beyond 72, we are looking at 72.4 as the next target, and beyond 72.4, if it stays, certainly we are looking at 74 levels in the coming sessions. So take your positions accordingly, like, share, subscribe and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or trading queries. Also, do not miss to join the webinar series, which also comes with the add-on benefit of live consultation with me. Thank you very much. All the links are there in the channel and video description. Thank you.